Hello and welcome and Merry Christmas to all. Hopefully you're enjoying the start of the holidays. I know I had my family over, my two sisters, my brothers, and brother, and all their kids. I never knew that many people could fit on a couch. But it was great though to spend time with family. Hopefully you're enjoying the same. We're going to slip in here a little class on trading with technical indicators. And so some of you asked about me wearing a Santa Claus outfit. No, my brother does wear the Grinch outfit. Okay, he said it was all fun and games until he went to his kid's school and someone got scared and hit him in the face with the Grinch mask on. So that's a reason why I'm not going to get in that suit or any suit for that matter. So little fun there. All right, we welcome to all. And again, Merry Christmas to all. Now, just real quick as we get started again, so tomorrow I will teach the last class on the Investor Master Series, and then we're taking a break for a week and change. So make sure you're updated with that schedule. Now, just remember when we talk about examples here, the information here is provided for general informational purposes only, should not be considered an individualized recommendation. When we talk about options, we need to talk about some of those because tomorrow we're going to reset the account. We're going to close it down and then reset it to the balances that we discussed before in the margin, the IRA for the year for 2025. So we'll reset those. Now, also remember when we talk about examples, those would be done on a paper money software application. I would express as strong as I can, the way you really kind of find out if any of these strategies might fit you, okay, is paper money, and you practice it like it's real, but it's paper money, okay? And so that way you kind of really get a sense of, is this something you would consider for yourself? Now, also remember when we talk about investing involves risk, including loss of principal. And today what I want to do is I want to talk about the current indexes. I want to talk about where they stand, bull, bear, neutral, kind of what do we think for the end of the year. Second, we're also going to talk about 3 recent exits and now what? I think one of the hardest things to do is to be patient. Now, maybe you say, well, James, I'm patient. I'm not, okay? I'm surprised I have 4 kids, okay? But the biggest actually thing is I want to talk about 3 recent examples and then what to consider maybe when it's not showing a bullish setup, okay? And I want to talk about also with that in the drops, that invitation is, might you consider a bearish entry? We'll talk about kind of those 2 bearish entry setups and what they look like on the chart, how we could see those. And then we're going to talk about some stocks that might be showing more strength than many other stocks in the current marketplace, okay? So our conversation is probably going to be a balanced 50-50 on bull and bear examples. Now, first what I want to do is let's kind of pull this up. And what I like to do here is I like to bring up just real quick the indexes on a list, okay? And I always like to kind of take a look at this column, and I'm really just trying to really see the relative strength, okay? Now, the difference that we see from last week to this week is what? Well, from last week, it was the NASDAQ that was leading, okay? It was way out front. This week, we're actually seeing that the SPX, is stronger, okay? We've seen an adjustment in the NASDAQ, and we see the SPX pushing to the upside, outpacing here the NASDAQ. Now, the Russell, the 3rd row, and the Dow Jones, really the 4th row, okay? So, different from last week, S&P outpacing the NASDAQ, that's different. And the other thing that we actually see as different is the VIX, that was really trend 3 last week above both moving averages. We're starting to see this, the trend there on the VIX falling down below its 10-period moving average. Now, that's not a bad thing. That'd be welcome. That means the momentum on the VIX is slowing. Let me kind of show you what that chart looks like. And if we pull this up right there, we did see intraday a little rally up to the moving average and then fading. Now that's a welcome sign, right? If you're a bullish investor, you want to see the VIXs falling to the downside. If it were to go up to, let's say a moving average, et cetera, or resistance, you want to see that like upper shadow and the price closing down near the low. So if you're a bullish investor, this is like a welcome sign to that investor who's bullish, okay? Now, when we pull up just real quick the SPX and say, what does it look like? Is it out of the kind of the bearish pullback so far? Well, if we talk about moving averages here, we can't say that. Okay, if we're talking about moving averages. But you got to remember something. When we're looking at price, that's for today. When we talk about moving averages, we're talking about a length of time, right? The shorter term moving average, a 10 period moving average, and that period moving average right there is 20. So it's kind of lagging. If we look at the price though today, what would you call this candle here today? What do we got? Well, I mean, let's kind of go back to Friday just real quick. A bullish engulfing. Stuff that in your stocking, okay? Now, if we kind of said, what do we see here? And could we be chiseling out a support area, maybe also getting a little breakout? Some technicians might say, James, that's a hammer. Now, if you think we're at an area of resistance where we could fall back down, you might say, James, this is a hanging man. Now, usually if we get like a bullish engulfing and then we get a candle that looks like that, I think more technicians would say this is a hammer, okay? And it's hammering out that support level. The horizontal line, this breakout area was right there, 58.72. I want you to kind of notice something on the chart here, that we did slip down intraday below that. Someone came in, who was it? Name yourself, bought below the support level. Now, I'm going to talk about NVIDIA here in just a sec, because usually when you see prices fall down below support level and then snap back to the upside, and it reverses course, usually that's viewed as a bullish signal. So that's why some of our comments here today are going to be bullish examples, okay? So the S&P kind of doing quite well. NASDAQ briefly, how strong does it look? Still hammer-like. Wasn't quite a bullish engulfing candle. It was more of a, what type of candle? Almost gave it away. What type of candle was that? On Friday, okay? Now, this is what we call down day, red candle, close higher. It's not close above the high of the low day because we didn't close above that day's high on Thursday. We call that just down day, red candle, close higher, okay? And then what? Gap. So that's what technicians call like a CHG. That's what we mean by that. Close higher, gap. Who created that? Me, okay? Probably almost 20 years ago. Close higher, okay? Down day, close higher, gap. And some technicians, they'll trade the gap. If it opens up higher than where we closed on Friday, they'll try to trade that right in the morning. That's not as common as hold, but probably about a third of the setups would be a close higher gap setup, okay? That setup starts with a red candle, then a green candle that's not a hold, and then the price gaps the next day. Let me repeat this. The entry setup is on the third day. It's on the open, okay, where the price is opening higher than the previous day's close, okay? We saw that here today so far, trying to become a hammer-like candle as well. Now, I want to kind of talk about just real quick. Now, some of you want to kind of maybe take a quick look at the Dow. Dow, inverted hammer, bullish engulfing, trying to get the turn as well. But I want to kind of start with this chart and kind of talk about one of our agenda items, okay? So we kind of talk about the SPX, stronger than the NASDAQ so far. Difference. Second, what you as investors have been dealing with, and all of us, is kind of this sell-off kind of started back in here, okay? And I want to kind of label this as number one, and then I want to kind of label the moving average cross as number two, and then I want to label the moving average, the lagging moving average, as number three, okay? Now, if you take a look at that, what have investors been dealing with? Well, many of you have been watching charts just kind of fall apart, okay? Now, how many of you besides me find it sometimes hard when you see prices falling down, the moving average just acting like a line of resistance, okay? And there hasn't been any green moving average on that entire chart. Second, if you look at the 20-period moving average, red, 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 all the way down, what does the investor do at that time? What does the investor do? Does the investor just try to force that entry and say, I think I want to get in? You could try to do that, okay? But sometimes the answer is, I don't see a setup, okay? So when we talk about this going from up to down, we just talked about the 10-period moving average going red, the crossover, the lagging moving average going from green to red. Now, if we flip this, okay, if we flipped it, we're now talking about the 10-period moving average going green. We're talking about the same thing, the moving average MAX, the cross, and we're typically talking about the 20-day moving average going green as well. And the answer is, how many of those do we have right now? The answer is 0, okay? So if the investor said, well, what are you waiting for? I'm waiting for any of these signals. And the answer is, we don't have them yet on the Dow. Don't have them. So the thing is, do you want to put your funds, your investing capital, where the sellers are still in control? Now, if the investor says, I don't want to do that, then the investor might say, James, I would rather be in cash, which, by the way, is a position. They would rather be in cash than maybe a stock symbol called ABC. Now, there is a stock symbol ABC that I think I can remember. But let's say they said, okay, would I rather be in cash or a stock hypothetical ticker ABC? Well, if they said, James, I see the setup, they might say, I don't have an entry signal yet. They're still waiting. Now, it's not unusual that when we actually have these pullbacks, that you can get pullbacks of 2 to 3 weeks. That's not unusual, okay? Now, I wanted to kind of set our minds and say, okay, so first off, we know what we're waiting for. We know that we're looking for any of these signs, and we know that the 10-day moving average is more aggressive entry. We know that the moving average cross is kind of more confirmation. And if we said we want more confirmation, we're waiting to that 20-period moving average goes green as well. Now, when the price is falling down, what are we watching? Well, we're watching for horizontal support levels, just kind of like what we saw in the SPX. Second thing we're also watching is we're looking for bullish MACD divergences. And what you're going to notice on many of these charts is they're not showing those bullish MACD divergences yet. Now, let me kind of fast fire through a couple charts that I kind of thought were interesting, okay? Now, historically, we had sold, okay, Costco. And we thought the target on Costco was right around $1,000. It overshoots a little bit. And what you're going to notice is we're just going to label on the chart, okay? The crossover happened here. We weren't quite at the target yet, so we kept it and sold it right around about $1,000. Didn't get the high, but got pretty close. The short-term moving average, okay, went red there. Second one went red there. And since that time, we've just been dealing with the moving averages, both red. Now, here's what's a bad sign, right? If those moving averages are still pretty separated apart like they are, well, the strength of the bearish momentum is getting worse. Or we could say it's worse-ifying. Now, thank heavens there was a target at 1,000-ish, and then from there it's just been selling off. Now, what are we looking for? Two main things. Okay, 1, 2, 3 on the moving averages. We talked about that. Second thing is, if the price is going to fall down, where do we want it to fall down to? To the horizontal support level. Why aren't buyers stepping in yet? Well, because it's not showing the moving averages change. Second part of this, they might not think it's at the horizontal support level yet. Now, to all of you listening here, do you see the bullish MACD divergence below? Yes or no? Yes? No. You got a 50% chance, okay? Now, if you look down here and say, do I see the bullish MACD divergence? I would say no. I don't see it, okay? So right now on Costco, sellers are still in control. So if the investor says cash or Costco, they're probably saying, James, I'd rather take cash because at least my cash is not eroding like in Costco. Now, if you looked at just real quick, Walmart, same thing here. Now, the difference in Walmart, there was a little short, if you like to take aggressive entries, there was an aggressive entry right in here, okay? So this would be entry 1, but it wasn't a crossover. If someone took a short-term entry in Walmart, that investor probably was stomped out of the position as it fell down through the floor. If someone said, James, I'd like to at least see a cross and or the 20, you never got that. That investor wants more confirmation,
They didn't get in. And what do we see here? It's still falling, okay? So here's the thing is, sometimes the answer is, I don't have the setup. And you need to understand, it's okay. Your first job is not to make money. Your first job is to protect capital. And if the price is going in the wrong direction relative to the moving averages, okay, the goal is to protect the capital. Now you might say, well, that's not my goal. Our job, that's what the goal is. Okay, now last one, I'll just show you fast fire real quick, and then we'll look at a sample entry. What about, let's say, something like Home Depot? Well, what you're going to notice is kind of have the moving average, turn red, cross, 2, 3, 20-period moving average, and then what we kind of just see is it's been red, 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 red. So why are we getting in? There's no setup yet. Do you see the divergence on the MACD? No. Okay? So stop putting so much pressure on yourself that every day there has to be a bullish entry. That's not true. Okay? Many days there can be more, a ton, but sometimes there's not. And you just have to know that sometimes it's okay to say, I'm more in cash than individual positions, and here's why. Okay? So if you've kind of put some pressure on and kind of made yourself feel bad, I'm going to ask you to stop doing that. Sometimes you just see less setups, like right now. Now, I want to kind of talk about, just real quick, some stocks that might be kind of showing an interesting setup or two. Now, last week, I think it was, and we'll confirm this, we talked about a bearish trade on NVIDIA. Let me show you what that was, okay? Now, let me kind of pull it back up in the paper money account. And what I'm going to do is I'm going to bring up NVIDIA here so we can see the position. We'll reconfirm the date. Okay, so what was the date? It was the 23rd. And yes, it was in this class, near the end of the class, we did a bearish trade on NVIDIA. Why did you do that? Okay, well, we did that because we saw the price on the 16th. There's the 16th. It fell down, and it fell down for a little bit. But then what do we start to see on the chart here? What do we start to see on the chart? Why is this? Do we maybe A, leave it alone, which we could? Do we maybe alter the position? Okay, and this is where it's going to kind of get fun. So first off, we're now going to count to 3. Okay, so 1. We also see the moving average cross 2. And also, if you take a look at this 136 is where we were supposed to stay below. Well, price bullish engulfing on Friday, gap to the upside, and now we're thinking, could the price swing back to the upside? Could it? Now, remember we kind of talked about those 10 main setups, right? And we said, if you ever see a stock that kind of goes down below the support briefly, just for days, and then snaps back to the upside, this could really be like a V pattern, right? Where you break below support, price is below that, and then someone is buying a pretty big amount of capital or position and then buying it below support. Why would you buy something below support? That goes against almost everything that we talk about. Well, sometimes these institutional investors, they have a lot of capital, and they try to get in when the price is maybe broken, okay, where they think they have enough ammunition of capital to knock the price higher. So the first thing that we're going to do is, I want to so option number 1 is if someone said, James, now, by the way, on that NVIDIA trade, did we set a conditional order for exit? Well, we have a buyback on that. We got some type of order. What is it? Well, let's look at it, okay? Right-click on this, cancel replace order. Now, what I'm going to do is when I do that, I'm going to come to this, and I'm going to kind of look and see where was the exit on the position. So what you're now going to see is this only had a target that if the price were to fall down. So this is if we went down to 125.25, exit the position. This does not have an exit if it were to go to the upside, okay? Now, the first thing is, how much of that max loss have we taken so far? I need your help here. Don't just sit there and watch me do it, okay? So I want to kind of see, well, how much are we down initially? So we collected $455, okay, got that, paid that, And what you're going to see is what do we got? What credit did we get? Okay. Now it's the credit that we got was $1.05. Okay. What's the spread width? Okay. Well, it's $4. And if you say, well, what's the risk per contract? Well, it's $2.95. There's the difference. Okay. Now, how many contracts do we have? 3 of them. All right. Now, if we kind of said, well, what percentage of this maximum loss are we down so far? Do we just hurry and jump out? Okay. Well, the max loss on this position is 885. Okay. So if we said, my gosh, we have lost the shirt of the paper money portfolio, as some people say, we are down $262, okay, of the 885. So we're down about 29% of the maximum loss. Okay, super damaging? Don't really think so. Okay, how much worse could it get? Okay, given the vertical answer, we could lose another $623. Now, I want to ask you a question, okay, you traders, investors out there. What would you do? What would you do if you actually saw something that was down below support? The support now, the price goes above that old support, which should be now resistance. Does the investor just say, A, I'm willing to take this loss, and I want to flip the position from bearish to bullish? James, I hate it when you ask me questions like that because now I got to think. That's why there's a brain on your shoulders, right? It's a computer. Now, so first thing is, would you consider taking the bearish position off? Number one. Second with that is, would you consider a bullish position if that price is snapping back to the upside? Trade example number one. Now, our concern is that's a pretty strong bullish candle that gapped into it. And notice the size of that bullish engulfing candle slamming into the resistance. That wasn't like a little spinning top or doji into the area of resistance. And then on top of that, add insult to injury, it gaps to the upside and ramming all the way to the intraday high. How rude, okay? Now, how many of you would sell? Okay, Isaiah says yes and yes. Yes, yes, into what? Okay, now, so here's the deal. I think what Isaiah is saying, okay, is let's say the investor says, James, I want to get out of this position, number one. So this is not, here's the thing. As people, it's the hardest thing to admit when you're wrong, okay? It's the hardest thing. Because if I admit that I'm wrong, I'm willing to lose, the investor says, some of that maximum loss. Okay, we're going to eat that humble pie. Now, we don't want to lose the 262, but we don't want to lose more, okay? Now, what we're going to do is we're going to confirm send, note the cost of the trade, including commission, send the order. So we're willing to lose that 255, and then what we're going to do is we're going to try to flip the position. Now, we're going to go from a bearish strategy to a bullish strategy. Now, one thing that we're going to show in this example is we're going to do like we're going to kind of do something more like an at-the-money put, short put. Now, wait, why would an investor consider that? Does anyone know the answer to that? Why might the investor consider an at-the-money short put? What is that investor really thinking if they truly know what they're doing? Well, if you sell an at-the-money put, which I'm going to do, you are really thinking that that stock might be pretty aggressively bullish. And you're saying, if you sell the at-the-money, you're saying, I want a bigger premium, and I think I'm more confident, the investor says, that the stock could stay up above 138. Now, quick update on the numbers. If the investor sells the 138, the premium 585, notice the bid-ask spread, look at the open interest. The delta on that is 45. If you get something that probably has a 45, 55-ish delta, you're pretty much at the money. I should say 45, 50. It's probably more like 45, 53 to be technical. But if we're kind of right around a 50-ish delta, you're at the money. If you buy something or sell something, buy a call, sell a put at that delta, you're pretty bullish, okay? That's what we're going to show. We're going to go 590 now, confirm send, and note the cost of the trade included in the commission. We're going to go ahead and send the order. Now, we have not gotten filled on that previous that short call vertical. We're going to cancel replace order. Why is it not filling? I'm at 195. I'm going to overshoot it just a smidge. Okay. Now it's not 262. It's a little bit less. Okay. Finally fills. I'll delete that order. Okay. I always wonder if someone's looking behind me. They're saying, hey, he's adjusting the order. Let's get him out. I don't know. Just kind of makes me wonder. Now, so first thing we did here is we recognized that that was a break of support, very large green candle, smashing through the resistance with a gap up in the price. And the one thing you'll kind of notice is here, when we look at the volume, okay? So when we look at volume, it's not absolutely enormous, but it's about 8 or 10% of the open interest, okay? Decent there, decent there. That's something we want to keep an eye on. Where we are seeing a pretty big jump is really on the out-of-the-money calls, okay? 143,000 contracts relative to the open interest of 128,000. Now, if we saw something pretty like that was exploding, we should see high volume relative to open interest on multiple different strikes on the call and the put side. I can't say that here, but we'd have to probably go down to, let's say, different contract, maybe the weekly options, to see if there's some activity. And there is on the weeklies for this Friday and next. But on the monthly options, not as much. The key word is yet. Okay? Now, the question that I'm going to spin back to you, is there a target on NVIDIA? What do you think the target is? Well, so the old target that we actually had on this was about 145. So what I'm going to do is I'm going to set an alert, okay? I'm going to show it both ways. I'm going to right-click on the chart. We're going to go down to create alert, and we're just going to say, and all we did is right-click on where you think resistance is. Mark at or above 144.45, okay? And I'm going to say sell position, question mark, okay? This is like an alarm clock. It's not going to get out. It's just going to alert you. Create. Now, let me show you the second way. If you said, James, I'm going to be out kind of doing caroling around the neighborhood, okay? Right click. By the way, that would be a great thing to do. Not a recommendation, but it wouldn't be bad, okay? Right click, create closing order, buy, okay? Now, single buy plus one, NVIDIA, 138 put, and I'm going to go to this limit order, market, data GTC. Now, I'm going to make this exit conditional, okay, that if we go up to that target area, get out. Mark. So if the stock price, now notice the little sideways V, is pointed towards NVIDIA. And so we're saying, look, NVIDIA, if you get up near that target area, if I'm Christmas caroling or whatever it is, just get out, okay? I want to take that money, shove it in that stocking, hypothetical paper money stocking, and what I'm going to do is close the position out. Now, so the stock price has to go there. Second, it's going to buy the option back. Why is it going to buy it back? Well, because we sold it initially, okay? And it's going to buy it back at its current market price. All right. Now, we're going to go ahead and say save, confirm, send. Now, note that cost of trade including commission. The thing is, we don't know what the fill is going to be. We don't know that. We know if it does fill, there's a commission, okay? So be aware of that. Send the order. There it is. All right. Any questions with that? Now, I want to kind of also go back to just kind of want to mention one quick thing on the charts, okay? And one of our agenda items we want to really cover is what happens when prices are like falling down, okay? Now, let me share this chart with you. And we did do some bearish trades last week, okay? Probably 3 or 4 of them. That does not mean that the portfolio is bearish, okay? So I just sent you a link in the chat. And if you go to the top right, set up, open shared item, okay? Just copy and paste in what I sent you in the chat. And we preview. And if we do that, you're going to see that we can now just say import. And what it does is it just creates a little mini chart, okay? And you could save that to your layout. Now, the point of me bringing this up, okay, is I want to go back to just real quick Home Depot for a second, is we know that if we talk about bullish bounce setups, stocks that were kind of pulling back and then bouncing up, We just call them hold and CHE. Close above the high of the low day, close higher gap. We've hit kind of that close higher gap here today. We'll talk about that more in just a second. But what happened, and we know that those little green dots on the chart are exhibiting where those hold entry setups could be. But what happens if the prices are like falling to the downside? What's the opposite of that? Well, it's close below the low of the high day, okay? And which is the opposite of hold. And also, for example, the close higher gap, the bullish version, the inverse of that is just close lower gap down. Who created that? I did, okay? And so the opposite of this, if I went to the little test tube, okay? If I went to edit studies, okay? If I click on edit studies, you're going to see there that right here that it has, there's hold and CBL-OHD, okay? Some people call it Kabloat, fine. We're going to go over here to the right-hand side, and where do we get to get to this page? Well, we just pulled up the chart, click on the little test tube. We went over here to where we saw hold, etc. Going to go over here, click on the little settings. Now, notice what happens is this chart is only kind of has the hold like selected to show that. Now, remember that scripts are not guaranteed for accuracy or timing. Verify. That's why you want to have an academic understanding on what they're supposed to show and verify with your own two eyes. Okay? Now, if I wanted to, I could say, hey, turn on the bearish version of hold. Well, let's do it. Hold. We'll click that to yes. And now what I'm going to do is, by the way, kind of something just real quick. Hold there as well. And it's just showing that the setup, the signal, is dots. Okay, and we can see that on there and there. All we did on this is R said no, change it to yes. And now what I'm going to do is going to click on OK, apply. Okay, so all I kind of want to show you is on this chart, you get to make the decision for yourself. Is it something you would consider for you? So what you're now going to notice is we had an up day, we had a down day, and you're going to see the very next day we gap lower. Ladies and gentlemen, boys and girls, that's what we call close lower, gap down. Notice that the close lower gap down starts with a green candle followed by a down day, a red candle that's not closing below the previous day's candle. And then what happens? The very next day we gap down. Some investors would trade that open right there. Okay, now by the end of the day, why is there a red dot there? Well, because by the end of the day, we were closing below the low, okay, of that highest, most recent green candle. Now, follow me. Then we actually fall down again. We get one up day. And then we see bearish selling again. In one day, we actually see that the price closes here and is below just the one up day. Now, this candle right here is a bearish engulfing. And it engulfs the previous day's body of the candle and closes below the low of that day. That is why there's a green candle. Now, I'll be honest with you. I know a lot of people that trade the markets that don't like to trade bearish. Fine. Me, I don't mind. I kind of like it. Don't have any problems with it. There's some strategies that are more interesting than others, like any bullish strategy as well. But some investors, even though they, and I said this last week, you want to at least know what the bearish exits look like. And I think that would help that if you are bullish, that at least you could understand academically what the bearish exits look like and why the investor might exit a bullish position. Now, that doesn't mean they're going to enter bearish trades, truly, but they might say, hey, at least I understand it, that this is kind of what bearish investors are looking for and why they might hammer the stock to the downside. Do all bearish trades win? No, just like not all bullish trades win either, okay? So I want to kind of make sure that you go in there, and I want you to kind of spot the red dots. The red dots are just the opposite of Okay. The red dots are just the opposite of hold. Okay. Close below low of high day. And the high day is the green candle. That's a big difference. Now, we have gone back and back tested that. Feel free to do the same for who? Yourself. Green candle. So when we talk about the high day, we're talking about the highest, most recent red candle. If there was only one candle, two candle, three candle, whatever it was, it doesn't matter. It's whichever one's the highest. Okay. Now, and also I want you to practice identifying the close lower gap downs. Now, by the way, if you pull up my X page, you will see that on that listing, and you will also see that on the listing as well. Okay. Now, I want to kind of go back to this real quick. Yeah. By the way, yes, that is on my X page, and I'll post that here in just a moment. Now, I want to go back to just real quick, and let me just kind of grab that for just a second. Got to be careful with that. I'm going to pull it up, and what I'm going to do is let me just kind of post that right there. So right at the very top of the page, you'll see that. Okay. Now, what I want to do is I want to go back to kind of some other stocks that are kind of showing maybe some bullish, relative strength. Okay. Now, one of the stocks that's actually been doing quite strong that we're going to keep an eye on, Amazon, trying to get a little turn. Has not had the moving average turn green yet, but price intraday so far staying above the 10. Keep an eye there. Apple has actually been quite strong. Okay. Just because you have a Samsung doesn't mean you have to be an Apple hater. We can love everyone, right? Well, fun for you Samsung people out there and Google Pixels people. You're gonna notice that has been a missile, okay, to the upside. The paper money account has kind of enjoyed that position. $2,800 and going strong. Up 32 days in a row, okay? Amazing, okay? Probably one of the longest trends we've really seen on that one. Pretty interesting. Now, the one, if we're talking about a new example, okay, talking about bullish trades, we're going to look at the example just real quick of Broadcom, okay? Now, sometimes when you take a look at this, you see a big run to the upside and a pullback. I mean, I don't know. Would you say that's an inverted hammer? The width of the body of the candle looks a little thin, okay? There was a gap up here. 20 period moving average still staying a little strong. But the thing is, we at least kind of have a marker. Marker for what? Well, we kind of have a marker of where that prior low is. Now, many technicians, they might say, James, I got a pretty strong upside move. When we talk about drawing diagonal lines, we would like to kind of get something maybe 8, 9, 10 days minimum, okay, to really say it's a stronger diagonal line. Sometimes, though, they might not be that long if the move is strong, okay? Kind of see it with it when we draw this, we're drawing from the top rights of the candles. That's where we're probably going to get the angle of resistance, okay? And what we're going to look to do is on Avgo, look and see if we can't play a little bullish bounce here. But we're also going to set that stop underneath 217.98. Now, one of the strategies we talked about quite a bit this year. Now, by the way, you can know all about technical indicators, okay? I had a friend of mine, good guy. Man, he knew so much about technical indicators, but he never traded much. I'm like, well, I mean, you have all this knowledge, but like, what trades are you doing? Well, I just kind of like to look at indicators. Well, the purpose of the indicators is to see if you could apply a strategy and to try to trade the trend, okay? Now, what we're going to do in this case, we're going to go to the trade tab. And what we're going to try to show in this case is we're going to look to do a long call vertical. Now, the long call vertical, we're also going to set an exit if it were going to go down, but also set a target if it were to go to the upside. Okay? So what I'm going to do is I'm going to pick the in the money call. Second, we're then going to sell the out of the money call. So we're buying the 230. Now, wait, why are you buying the 232.5? There's no open interest. Easy answer, okay? We're going to where there's volume is today. Open interest is the cumulative number of contracts that are open and still unexercised. Okay. By the way, that's 50% of the open interest. Keep an eye on that. Pretty big number. What we're going to do in this case is we're going to go to now the 240 strike. Why are we going to the we'll go 235. We'll widen it out here. Why are we going up to the 240? Okay. Well, we're sticking to where there's volume and open interest. You got that one or this one. If we did the 230, 235, we just probably do double the number of contracts. If we did the 230 and the 240, less number of contracts, less commission. Okay. If we could buy multiple contracts, I'm talking about. Now, what we're going to notice is if we did like a long call vertical on Broadcom, we got a 460 debit. The 460 debit represents the max loss given the vertical. That max loss is built in given the vertical. Okay. Now, what I'm going to do is I'm going to change the single order. First triggers SCQ. Now, what this does is we're going to flip this order. Right click on that now. Create opposite order. We are going to do trading with a vertical. Okay. Now, what we're going to do is we're going to use really this old high. And so if we went to that and I'm just going to kind of put in this case, do we have to put 250 perfectly? No, I'm going to kind of put maybe like 248. Okay. Maybe 248. Maybe you put 249. Maybe you put 250. Now, remember, how do you really learn how to trade? You paper money trade it. Okay. So I'm going to put 248 as the target. Second, underneath, I'm going to tell us that if we go below that 217.98, that's not a great sign because that means that the bounce is deteriorating. And for example, the investor might want to exit the position. Now, the con of that, just because you go down below that for a moment, that doesn't necessarily mean it's going to close there. So you guys have to understand, you're trading. Slide this over. We're going to bring up the order. Now, could the target be higher? It could, but I'm just setting a kind of the most likely. Most likely does not mean 100% chance it's going there. It just means the most probable likelihood is that it could try to come back up to that prior high. If you set an extension target, less probable, okay? Still could happen. It's just less likely than the prior high. Now, what I'm going to do is I'm going to put a 248 target, okay? And that 248 target, if the stock price, AVGO, stock price is greater than or equal to 248, exit the position, okay? Second, AVGO, mark less or equal to, we're going to put that stop underneath or the trigger to exit the vertical at 213.62. Now, whenever you do this, do not assume anything. You want to verify, okay, I said, look, if AVGO, the stock, is greater or equal to 248, I want to verify that these numbers down below match, do not rush through this, match what I wrote right here. It does. AVGO, if the stock is less or equal to that price, exit the position, okay? We're getting into, and we're buying it. To get out, we would have to sell it, okay? Now, what we're going to do in this case is we're going to save the order and confirm and send. Now, on our bullish trades here, you know, we talked about AVGO. We also talked about the looking at kind of another bullish trade, which I'll kind of review that in just a moment, of NVIDIA. I'm going to send this order. Note the cost of the trade, including the commission, and what the max loss is, okay? The max loss is the debit. The max loss is the spread of the options less the max loss. But note the cost of the trade, including commission, send the order. Okay, now, want to go back to one other stock, just mentioned this, we got to wrap this up. But if I look at, let's say, Google, this is another stock that's been quite strong. I would have to say piercing line on Google, and then you're seeing an intraday bounce and staying above the 10. Now, if we have 5 more minutes, my gosh, we'd like to do one more example on Google, okay? But maybe we actually talk about that tomorrow. Now, remember, tomorrow at 11 p.m. Eastern, we have the class called Investor Master Series. We'll talk about closing some of the positions out that we have. We'll talk about adjusting the portfolio to the new account balances for the year of 2025, okay? We'll do that tomorrow. That'll be the last class of the year. I can't believe it's gone so fast, but good at the same time. Now, also, so stay tuned for that coming up tomorrow. Coming up next at the top of the hour, we'll have Barbara Armstrong teaching the class on cover calls and short puts. So stay tuned for that. Now, also a quick reminder that if you have not subscribed to our YouTube page, go to YouTube. You could just type in Trader Talk Schwab Coaching Webcast. I'll send you the link right here. Pretty easy to just subscribe. I mean, you pull up the page I sent. If you've not subscribed already, right in the middle of the page, it'll say subscribe. Subscribe doesn't mean you pay. You just follow our page on YouTube and can see all of our content right on your computer and your mobile devices. Sweet. Okay. Also want to give us a quick reminder. If you said, James, is there a playlist for this class? Yes. And so you could go back during the holidays and see all the previous classes as well. On my X page, I took some of the greatest classes that I think many of you thought. And also what I did is I posted those links on my X page as well. So don't just sit there and just sit on the couch and watch TV during the break. It's not a bad time to study up, and that's what I do as well. Okay. So stay tuned for Barbara Armstrong coming up next. I want to thank you for your comments and your participation. And thank you, Brett Crowther, for answering those questions in chat as well. And also want to give us a quick reminder that we invite you to paper trade so that we can get a feel of actually how to do trading. And it's a strategy that you would consider for yourself. Stay tuned for Barbara Armstrong coming up next. This has been the class on trading with technical indicators. And Merry Christmas to all. Take care. Bye-bye.